In 2025, the investing world is changing faster than ever. New technologies, market volatility, and global uncertainty are forcing investors to ask one big question: should I invest in ETFs or individual stocks? Both can make you wealthy, but only if you understand how they fit your goals. ETFs offer diversification and stability, while individual stocks can bring higher reward and higher risk. Most new investors jump into the stock market without knowing which strategy matches their mindset. The truth is, what works for one person might fail for another. That's why today we'll break down the key differences between ETFs and individual stocks so you can make the smartest move for your money in 2025. By the end of this video, you'll know exactly which path, ETFs, stocks, or a mix of both, fits your financial goals, risk tolerance, and lifestyle. And remember, the right strategy doesn't depend on trends or headline. It depends on you. Your income, your patience, and your vision all shape the right investment path. The goal isn't to follow the crowd, but to build wealth in a way that fits your life. In a world chasing quick profits, the real power lies in clarity and discipline. This is not just about money, it's about building a foundation for your future, one smart decision at a time. Let's uncover the truth behind both strategies and discover which one helps you own your tomorrow. 1. Understanding ETFs. The safer, smarter. Option ETFs, or exchange-traded funds, are baskets of investments, a mix of stocks, bonds, or other assets, all bundled into one. When you buy an ETF, you're not betting on a single company. You're investing in an entire group, like the S&P 500 or tech sector. This instantly gives you diversification. If one company drops, others can balance it out. That's why many long-term investors and even billionaires use ETFs to grow wealth steadily without worrying about daily market swings. ETFs are also beginner-friendly. You don't need deep stock knowledge, just consistency. You can set up automatic investments every month and your portfolio grows passively over time. It's the easiest way to build wealth without constant stress or research. In 2025, with AI-driven markets and unpredictable global shifts, ETFs give you stability in a world that changes overnight. They protect you from emotional decisions and help you stay focused on the long term. The beauty of ETFs is that they allow ordinary people to benefit from global growth without needing expert-level timing or analysis. They represent calm in the chaos, slow, steady growth that compounds quietly while others panic. With ETFs, your wealth builds in the background as life moves forward. It's the kind of investing that rewards patience over prediction, strategy over emotion. In the race of money, sometimes the tortoise really does win. 2. Individual stocks. The path to bigger gains. Individual stocks are for investors who want more control and higher potential returns. You pick specific companies, hoping their growth will multiply your money faster than any ETF could. The upside? You can make huge gains when you choose wisely. A single great company can outperform the market for years. But the downside is clear. When you're wrong, losses can be painful and fast. Investing in individual stocks requires time, research, and emotional discipline. You'll need to track earnings, study balance sheets, and understand industry trends. It's not gambling, and it's strategic ownership in businesses you believe in. In 2025, where innovation moves at lightning speed, individual stocks can reward those who stay informed and punish those who guess blindly. Picking strong companies early can change your financial future. But remember, conviction without research is just luck in disguise. Owning individual stocks means taking full responsibility for your wins and losses. It's a test of patience, resilience, and vision. Every stock you own tells a story of belief, risk, and potential. For those willing to put in the work, it's not just investing, it's building a legacy one decision at a time. 3. Risk versus reward. Finding your balance. ETFs and stocks exist on opposite sides of the risk spectrum. ETFs spread your risk. Stocks concentrate it. If you value peace of mind, ETFs are your friend. If you crave higher returns and are willing to study the market, stocks can give you freedom faster. Many smart investors use both, ETFs for long-term security and stocks for short-term growth. That's how they balance stability with opportunity. The best portfolio isn't about choosing one over the other. It's about creating harmony between the two, based on your goals and temperament. Risk isn't something to fear, it's something to manage. Your ability to stay calm when markets shake defines your success more than your ability to predict them. True investors don't chase excitement, and they chase endurance. The secret isn't avoiding risk, but understanding it deeply. Because when you master your emotions, even volatility becomes your greatest ally. 4. What's better for you in 2025? Ask yourself these questions. Do you have time to research companies every week? Can you handle market swings without panic? Are you investing for 5 years or 25 years? If you want simplicity, consistency, and minimal stress, ETFs are your best friend. If you love analyzing businesses and can stomach volatility, individual stocks may bring greater rewards. And if you want both freedom and safety, combine them. Use ETFs to build a stable foundation and add individual stocks on top for extra growth. The smartest investors in 2025 won't be the ones who take the biggest risks. They'll be the ones who understand balance. The right choice isn't about trends, it's about temperament. Your investment journey should reflect who you are, not what others are doing. Wealth is personal. It grows best when aligned with your mindset and lifestyle. Be honest with yourself about your patience, curiosity, and resilience, because when your strategy matches your nature, success becomes inevitable. 5. Building a 2025 strategy that works. Start with 70 to 80% of your investments in diversified ETFs, like those tracking global markets, tech innovation, or dividend-paying companies. Then use the remaining 20 to 30% to invest in high-conviction stocks you believe in. Keep learning, keep reviewing, and never stop adapting. The market evolves, but the principles remain. Patience, diversification, and knowledge always win. You don't need to choose between being cautious or ambitious. You can be both. Rebalance your portfolio every few months to keep it aligned with your goals. Track your performance, celebrate small wins, and learn from losses. Every move teaches you something valuable. Don't chase trends, build habits. Because in 2025, discipline will beat prediction every single time. Real investors don't react to headlines. They build systems that outlast them. Focus on consistency and watch how small, smart actions create unstoppable progress. Every decision you make today writes a chapter in your financial story. Make it one worth reading. Whether you choose ETFs or individual stocks, remember, wealth isn't built overnight. It's built over time. The secret is consistency, not luck. Don't wait for the perfect moment to invest. Start now, learn as you go, and adjust with experience. Every dollar you invest today plants a seed for your financial future. Every great investor started with uncertainty, but they took action anyway. So take that first step, no matter how small, and watch your knowledge compound over time. The earlier you start, the faster your money begins to work for you. Don't just dream about financial freedom. Start building it today. If this video helped you understand your path, hit the like button, subscribe, and share it with someone who's still confused about where to start. Because in 2025, the best investment decision isn't choosing ETFs or stocks. It's choosing to begin. Because in the end, your wealth isn't defined by what you invest in. It's defined by how consistently you move forward. And the best time to start that journey is right now.